Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we'll be looking at the bull price channel. This one is bullish. It's a continuation signal. It can be found in an uptrend. Whenever you're looking at one of these, it looks a lot like a rectangle. The difference between a rectangle chart pattern and a price channel is that price channels will have a positive or a negative slope, meaning they're either pointing up or pointing down. And this one is obviously pointing up, and that would be bullish. The rectangle has neither a positive nor a negative slope. It's simply horizontal. The main trend line of the bull price channel is run along the support line. Basically, you're going to need at least two low points to draw the trend line, and you're going to prefer more than that. In this particular case, you have several. It's very clear that it's the main trend line. Whenever you're finding the top, just simply run a parallel line across the high points of the channel line, known as the channel line. Here would work. Any of these would actually work. You can simply run across that way. Some guys will actually set their channel line at the extreme, the other side of the coin. Rather than trying to line it up with as many high points as possible, they'll simply find the highest point and draw it off of there. As long as it's still a parallel line, they're fine with that. I don't do that, but it's how you want to trade. For me, I want to find the point that you're getting most oftentimes the peak. That would be the best method for me. So whenever you're looking at the bull price channel or the bear price channel, volume is not all that important during the formation. You're going to have many different setups. You can have an increase on the lows and increase on the highs. The main thing to note is whenever you do get the price breakout from the channel, price activity is accelerating. So in this particular case, you're looking at a bullish price channel, which is a continuation of an uptrend. So when you do get that breakout like you did here, you would expect that acceleration to really push stocks. Okay, that's what you're seeing here, and that's what people are betting on. At some point down the road, that's going to happen. Once price activity does break out above the channel line, which is your resistance line, it's a good buy opportunity there, because that resistance line is likely to start acting as support. So in fact, when you run up here and you're thinking it's gone too high, I can't buy there, it's actually just starting, because you're now sitting on top of a resistance line that has turned into a support line, and therefore you're actually buying at the bottom. Let me clean this chart up a bit. You can get a target for how high you expect price to go once the breakout happens. Simply measure the distance between your two parallel lines, then add or subtract that from the breakout point, whether you're looking at a bullish price channel or a bearish price channel. In this particular case, looking at a bull price channel, therefore we would add this distance from the breakout point and say that's about how high we expect price to go. Remember, it's just a target. It's not set in stone, so use your best judgment, but it gives you some idea of what you expect. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.